I was going to release this video tomorrow, but instead I'm getting it out as soon as possible so you guys have the information to act on it. While other traders were saying that 20,000 was on the horizon, I was one of the very few guys telling you that the bottom was in back in July. As you guys can see on my Twitter, I gave you guys 8 reasons why the bottom is in. I also did a YouTube video on this. I went into extreme detail as to why we were done with the bottom right here on June 22nd. So I have now changed my bias to bearish on Bitcoin, okay? Based upon my history, that should mean something. Now, in this video, I'm going to tell you exactly why I think Bitcoin has a pretty decent, substantial drop on the way. I'm going to lay out exactly why I think that's going to happen, where my buy target's in, and what my plan is going forward. So go ahead and like and subscribe this video, and we're going to dive right into it. So last night on Discord, I posted an update for all the guys there, and it talks about how these are the main reasons as to why I'm actually having a lot of caution in the Bitcoin market. We'll go over each one of these in detail. Just understand that this is the first time in a very long time I legitimately think we have a lot of problems coming in. So we're going to go ahead and dive into each one of these. Now, the first we're going to look at is going to be the bearish divergences. So if you watch my 8 reasons as to why I was bullish on Bitcoin, this was a major reason. So if you go to the weekly chart, zoom out a little bit. There we go. If you go to the weekly chart, you can see how this is the weekly chart on Bitcoin. I'm going to drop this down actually. And what we're going to do is we are going to annotate the top highs of this movement. There's one high there, another high, and another high. Okay, each one of these highs we're now going to coincide with the RSI. Okay, now this is a coincision right there. This one is another one right there. This one is, drop it right down, another one, and here's another one. Okay, as you guys can see, although each of the highs is making a higher high on price, the RSI each time keeps making lower highs. This is a classic bearish divergence on the weekly chart. And as you guys know, this played out very, very drastically. And we had the exact same thing that was appearing on the downtrend over here. And that's what I was saying as to far why I thought that the bottom was in on Bitcoin and we're going to have a massive explosion, as we essentially did, right? We can all see this. So these bearish or these bullish divergences were forming on the daily chart. I think we had about 6 or 7, if I remember correctly, on different lows are being formed, but each one of the RSIs was making a higher high. Well, however, if you go to the most recent price history, we are having the exact opposite happening. We're having like we had back in March through May in Bitcoin, we have a very similar situation. These are on the daily charts, but if you go over here, you have a high, you have a high, you have a high, and you have a high. Okay, just like we did previously on the weekly chart. Well, we have a high. Let's zoom in, make sure it's really close. Okay, go drop it down. We have a high, we have a high, and now we have a high. Although the price is going up across the board, we are actually losing strength on the RSI. So we have a bearish divergence on the daily chart for all of Bitcoin. This is very concerning. That means that we are losing strength across the board. So this bearish divergence is absolutely present, and I think that this is going to play out pretty dang soon, or maybe it already has. Now, the next thing we're going to talk about is going to be the positive funding rate, and this was once again a major thing that I was looking for on Bitcoin as to why I thought that we're going to keep going up. So the funding rate is essentially who is paying who on the long and short position. So I'm not going to go into too much detail, but this entire time right here, as you guys can see, if I can get my, where is it at? Looking for my brush. This will work. So as you guys can see, this entire region right here, this is all negative funding. So this entire region is negative. That means that the shorts were actually paying the longs to stay open. However, very recently, we can see funding has turned positive for the first time in a very long time. This means that now our long positions are actually paying short positions to stay open. This is a major shift from what's been happening this entire time. That's concerning, guys. Whenever there is a positive funding rate, that's generally a sign that we no longer have that bullish pressure pushing it up by having these overexposed short positions open. So that's also concerning, and that's my number 2 thing I'm looking for. Now, the next I'm going to look at is the low volume on the increase. So let's go ahead and get rid of that. On this, as you guys can see, this is the funding chart, right? Or the volume chart. And what you want to see is you want to see a lot of volume on the increase. And you can see how it's slowly starting to increase the volume on this rise upward, right? However, if you go over here, you can see this volume does not match what you would expect for a continuation of a parabolic movement. So to me, this means that this is actually just a bearish retest before some sort of a drop. Does it have to continue down to like 20,000? No. But the thing is, though, is that this volume does not look healthy or like a continuation volume. This looks like a dead cat bounce to me as of right now, just based upon the volume. That was also what I was looking for right here to know that this was another bear trap. The volume here was significantly lower than the drop that happened over here. Okay, it doesn't look like much, but I assure you, in the low time frame, it becomes very apparent. So this is concerning, guys. I do not like the overall volume profile of this market. The next thing I'm going to talk about is going to be currently rejected off a major daily breaker. Well, if you've been following my 4 steps to success on Bitcoin, we went over step 1, we went over step 2. However, we're currently rejected off step 3. I'm going to annotate it on a new chart so you guys see it very, very clearly. This right here is a major daily breaker, okay? Very major daily breaker, and this is what it looks like right there. You can see it's a very important level because it is a drop in price, a consolidation, slightly upward movement before a continuation down. This is the area, despite this massive bearish pressure, this is the area that the bulls fought back. Ultimately, they lost, but this is the area of major contention. So anytime that the price comes back to this level, you would expect some sort of resistance or support depending upon where it's coming into it from. Well, as you can see, we came all the way up here, and where are we rejecting? Right there, guys, okay? This is a pretty important level, and I've annotated this for weeks, guys, weeks or months at this point. So this level is holding as a resistance, and we have the bearish divergences. We have the positive funding rate. The volume profile does not look healthy for what we want to see for a continuation higher. This is definitely a warning sign, absolutely. So the next thing I'm going to go over is the golden pocket retracement, okay? Now, the golden pocket is going to be this right here. Go to the Fibonacci extension or the Fibonacci retracement tool. If I can find it, there we are. Go to the very, very top. Go to the very, very bottom. Which one is it? There it is. Nope, right here. And you guys can see the golden ratio or the golden pocket is going to be the 0.618 to 0.65. Well, the 0.618 to 0.65 is right here, okay? And I'm also going to annotate this just so I can have it ready for the next one, okay? As you can see, the golden pocket is only about, well, from our current price action, about 6% away. That's very close, guys. So this is going to be a major level where we're going to have a lot of institutional investors take profit. This is, although it doesn't seem like much, the 0.618 to 0.65 region is an area where a lot of investors either buy if it's dropping into or sell if it's going up into. And a great example of how I was able to utilize the golden pocket was my ACH buyback point, right? This was where I placed my bids right here because it is the golden pocket retracement zone. And you can see it dropped in there and now has popped to the upside. This is exactly what I would expect if the Bitcoin comes into this point. However, it would be the opposite. So it would be, let's go inverse. There we go. Just like this, right? So go to the very top, to the bottom. You guys can see, came the golden pocket and rejected down, okay? Same sort of structure, but it's an inverse of this chart. Okay, exact same thing applies. So it comes up here, does its dead cat bounce, continuation downward, right? So yeah, the golden pocket is a very major region, and we're coming into it very soon, guys, and that is concerning. So let's go ahead and change it back to a normal chart, and we are going to keep on going. But the golden pocket is very important, and we are coming into it only 6% away. Is it worth the risk of already showing so much weakness going in the golden pocket? Man, I don't know, guys. Personally, probably not. Now, the next one I'll talk about is the 702 retracement. 702 retracement is one of my newer ones I've added fairly recently, but I've seen a lot of success with the 702 on also giving a lot of resistance or support. Well, we're coming in from the downside, which means this should act as a major resistance level, and the 702 is only 11% away. So is it worth the risk right now to have your position when you have these two major levels right there to potentially push you back down? I don't know, guys. It's a lot. It really is a lot. So those two things right there are very concerning to me. Just want to go ahead and get rid of them. We'll go to the next point. The CME gap has been filled. Okay, we're going to go over here to the technical chart. Go to the CME, which is going to be right here. And this is the CME gap, or this is the CME chart, the futures chart, okay? This right here was my gap I had listed out, and it's been on my chart for a very long time. If you go back to the US dollar pairing, go back to my 4 steps of success, and my CME gap has been on there for a very long time. Well, as you can see, we have went above it. That means that we have filled the gap. That means that we have now gotten rid of that inefficiency, which means this bullish pressure to fill this gap has now been filled. Although there's no real technical reason as to why this is important, the thing is, over the course of the CME history, most gaps get filled, and this one has now been filled. And that is a little bit concerning because now it's been filled. All the people who are trying to get that filled now has been able to do so. And now we can continue back to the downside. So the CME being filled is a bearish sign. So we'll see what happens with that. And lastly, we are currently 76 in the fear to greed index. Let me check what it is today. Alt-me. There it is. Right now we are 76. Okay. We are at extreme greed level on the fear to greed index. And if you go down here, when investors are getting too greedy, it means the market is due for a correction. What that means is that when the sentiment gets too high, it's time for a good old-fashioned flush and just wiping out people who are trying to get in the market the last minute, okay? Essentially, when people are going into overexposed longs, when they are getting too euphoric, that's the perfect time for the bears to come in and just wipe out all those positions before a continuation to the upside. So when you do get too high up, that's a really, really bad sign. If you go back to this chart, this fear greed index is damn near, and whenever it is the lowest, that's generally the point where the market reverses. Okay, so this right here is June 22nd. The fear to greed was at a 10, July 21st. Let's see what the part was at there. This was the absolute low point, except for this little point right there. So fear was at the absolute lowest at the very, very bottom. And right now, we are all the way up here at almost the highest point in months. Yeah, we're based at the highest point we've been at months. And we have all these bearish pressures in the market, guys. This is all very concerning, okay? I cannot overstate it. So these are all very important things, and you need to use a lot of caution in the market. So now let's talk about different support and what I'm doing, okay? Me personally, I'm actually still undecided. I'm going to keep letting this thing play out a little longer. I want to see what happens with the market. But I'm very quick on the trigger right now. I really want to see what happens. So what I'm looking to find and what I want to see is I want to see this level get reclaimed. That's the number one thing. We need to continue this bullish market structure. We did come back in here and we retested this previous high. That was a good test. However, if we lose this level, I think we have quite a ways to fall. Now, if we do start falling, where are we going to drop to? Well, the most obvious level that I think makes a ton of sense is going to be the 200 moving average. However, we've already lost it and tested it so many times. I don't know if it's going to hold. I really am not sure. Now, the level beneath that is this daily breaker, okay? But just like with the 200 moving average being tested so harshly over the last few couple weeks or whatever, this daily breaker has already been tested so many times. I don't know if that's going to hold. Okay, we'll go to the 4-hour. This level right here might act as some sort of resistance, or some sort of support, but I'm really not even that convinced. Well, what's the most obvious level in this chart? Hate to say it, right there. I think this is the most obvious level that I think will be the best opportunity to get back in this market. And that's going to be between 39,000 and 40,000. I think this is the absolute sweet spot for us to get back in the market. Let's go to a weekly. Nope. Daily. Nope. I think that's it, guys. I think if we do start dropping and this does play out the way I'm thinking it might, we're going to have a good 20% flush from our current position. Yep. 17 to 20%. I think that makes a lot of sense. This would be the area I'd be looking to buy. I think it'd be a very strong buy opportunity. I think a lot of people will be entering the market at this point. But yeah, I think that's very, very possible. So what I want to see is I want to see some sort of obviously a change. I want to see this reclaim this level. That'd be a major show of strength. But if we start losing these support levels, I will absolutely start getting out of these positions. Now, what is this going to mean for our altcoins, right? And that's always a really, really important thing. We need to make sure we're aware of what's going on with alts. Well, our altcoins, I've talked about this many, many times. We have not had a proper test of this level. And this is a weekly level, and we have not had a retest yet. So I really, really do want to see it come back in here and do this proper retest like I drew out weeks ago. I want to see this retest happen. I do think it would hold. If we don't hold this level, we have a lot of problems in the market. Okay, we do. However, I do think that if it does drop in here, it will hold. But our alts will drop around 17% across the board is the total to market cap, right? So across all altcoins, we're going to lose about 20% value. If that's something you're not able to handle, I mean, you really need to reassess your position, and maybe you are overexposed to the market. The next thing I'm going to look at is the Bitcoin dominance. Let's look how that's doing. And right now, the Bitcoin dominance is actually increasing. That means that our alts are actually losing strength relative to Bitcoin. This is not a good sign. Once again, if Bitcoin's dropping and we are going to have a repeat of March to April, where although Bitcoin was stagnant or dropping, okay, March to April, alts were actually increasing in value and strength as Bitcoin was doing just chilling around. But so far, Bitcoin is still holding up strong relative to the alts, and our alts are not really gaining any movement. We need to see this curve back downward for our alts to have a lot of strength. So, yeah, guys, there's a lot of really bearish signs in the market, and it is absolutely concerning. So I'm not sure exactly what I'm going to be doing. Make sure to be in the Discord, because that's where I'm going to be giving you guys the most up-to-date information. And not only that, not just be in the Discord, make sure that you are a Patreon member, because my Patreon members get a ton more information than a free member. Okay, it costs a little bit of money, and I understand that. However, if you want to get the most up-to-date information, you need to be a Patreon member so you get it. Not only that, I only have 50 total slots, and 22 slots are already filled.